Hello, I'm Finola Burke from RaaS and welcome to our 2024 Outlook series. In this session, we're focusing on purpose-led proptech rent.com.au, ASX ticker RNT, and joining me is Greg Bader, CEO of rent.com.au. Welcome, Greg, and thanks for joining me.
Thanks, Finola, and Happy New Year.
Happy New Year and great to have you back. Now, rent.com.au reported Q2 group revenue growth of 33% to 808,000, despite it being a seasonally weaker quarter. What's behind the strong result?
Look, it was rent pay. So we still saw a bit of a drop-off in the quarter on the rent.com.au portal. I mean, that's expected. It happens every year. People have better things to do than try and move house over Christmas. But the annuity style of rent pay is what the difference is. Now, we also had a little bit of one-off, which was a MasterCard partnership, a bit of advertising through December and January. So that helped us along. But yeah, great quarter on rent pay with 1,500 new subs and a lot of leads in the pipeline that we're closing out as we speak.
And rent pay has now also surpassed 200 million in rental payments through the platform. And the 120,000, I should say, that you generated in Q2 was obviously welcome fit. Are you happy with the progress of rent pay, particularly now that you've gone past 8,600 active subscribers?
Yeah, look, very happy, but we want more. There's a lot of things happening at the moment. We've beefed up our sales side of it, but sales is not really the right word. It's more our engagement side of it. For an agency to move payment platforms, it's not a small thing. So we're lucky with rent pay. You know, it is easily the most attractive platform out there. So a couple of little things. One is we're one of the lowest cost. The fact that 20% of our user base are people that have voluntarily or chosen to join rent pay means from an agency point of view, there's low pushback on people coming across to the platform. We have features that are first in market, score builder, bill smoothing, etc. So it's more just a case of explaining and working through the transition platform, how people move across, and then uncovering all the agent features to an agency as well. In our quarterly, we also spoke about our partnership with MRI. So that's another layer of engagement for us, and we've got some work going on in Sydney over the next few weeks with the team there. And with that level of integration, it actually takes what is already a smooth and fantastic product and just takes it to that next level in terms of integrating into their existing CRM. Agents can create tenants instantly, all that sort of stuff. So there's a lot of work gone on into the back end side of it as well.
And Greg, ARPU, or average revenue per user, was flat in Q2 at $510 per customer. What was behind that? Could you sort of give us a little bit more detail?
There's nothing, pardon me, there's nothing in that. So our ARPU numbers fluctuate a little bit. So in the quarter, we reduced our credit card rates to 0.99. So now market leading. It's the cheapest way you can use a credit card to pay your rent, and 50% of our customers that sign up off the street are choosing to use that. So that obviously takes a little bit of a hit there, but importantly, there's no hit on AMPU on that one because they're regulated products. We, a big bunch of users signing up in the quarter, 1 month free, so there's a natural lag there as well. So I don't put anything into that at all. The big focus for us is we have a number of ARPU generating products, our score builder, our bill smoothing. So there's a lot of focus to improve and increase the engagement rates there. So it's interesting. There's two distinct groups of customers on rent pay. There are people that have chosen to join rent pay off the street. They over-index in all of our products. They've joined rent pay because of all the fruit and features we offer. Then we've got the agent side, which are largely passive. So there's a whole communication and onboarding program going there. So we're starting with newsletters and whatnot to just really educate and inform people that there's a bunch of other features out there that they may choose to use. And we see that starting to work. A customer will come across to us will be migrated across to us from an agency. They're probably using BPay or direct debit or one of those other 1990 type products. And then over time, we see them transitioning and moving to instant payments, credit cards and whatnot as well. Focus for this quarter, we've got 2 new products coming in there as well. The China payments arrangement will be interesting. From a rent pay point of view, we love it because we've got demand, we've got customers and agencies asking for it. It opens up the whole student accommodation side of it as well, and there's a few other features we're looking at in that. From a business point of view, it's an unregulated product, so there's a margin, so we get to punch up our ARPU even further.
And you had your first Click to Pay campaign on the platform, which was with MasterCard. Do you have any learnings from that, and do you see that as an opportunity to extend into other Click to Pay campaigns?
The MasterCard one was, I'll be honest, it was pretty opportunistic, great timing. We'd recently lowered our credit card rates, so being able to jointly fund some advertising and awareness around that was fantastic. We implemented the Click to Pay product. So Click to Pay, for those that are following at home, is simply, rather than having to type in all your credit card details, you can type in your mobile phone number or your email address, look up against your registered database of cards with MasterCard, and then you can click which card you want and away you go. And then there's two-factor in there as well. So it's quicker, easier, secure, all those sort of things. So it's a cool product, and one of RentPay's positions in market is that we will take care of the payments arms race on behalf of you or your agency. So adding these new features as they come to market is important. The other one for us was brand association, and I don't know how to articulate this properly, but simply put, standing next to a well-known, well-respected brand pays dividends back to us when agencies are looking at us and maybe are not that aware of RentPay itself. So they see that association. So yeah, it was great. We'd look to do more of that. It was the first time we've actually done anything on the RentPay side with advertising. It's a well-trodden path on our portal side because it has such a large volume of customers every month, 700k users every month. RentPay, obviously, with a bit over 8,500 customers, it's a lower traffic site, but it's even more focused in terms of the messaging, what we can put in there. So I think there are other opportunities, not only with the payments side, but as we get into the insurances and then obviously our mortgage builder product.
And Greg, what else can we expect to see from rent.com.au in 2024? I mean, how are trading conditions at present, and what's the outlook for further partnerships?
Yeah, so there's a few components to that. So first of all, there's just RentPay needs to keep moving forward just to grow and to stay ahead of changing markets. So things like payment choices and whatnot, pay to, or as those things mature and start to become usable, we'll roll those into RentPay. Rewards is interesting for us as well, and we're chatting to a number of people, and our first rewards partner will go live this quarter. The focus for us is really around how can my everyday spending, what I normally do without changing my behaviour, contribute back to my rent, and that's kind of a bit of a focus for us. So that's something that'll come through. The mortgage builder one is something I'm pretty passionate about, and the concept is simply, how do we help people build a deposit, give them a rate of return or an interest rate better than market, and then when we look at our rent bond product, which is now the largest bond finance product in the market, that has a fairly high cost of capital. How can we join those two things together and have a bit of a win-win all around? So that's what we're working towards. There's probably some interim steps in there, more likely a partner involved as well. Once we get into, for us to create a full savings account structure for a RentPay customer, it's essentially running a managed fund. So there's a whole bunch of regulatory and compliance components to that, which come at a cost. So, we need to seek out steps to get there, but that's certainly the direction we see ourselves.
Well, Greg, thanks for taking the time to speak with me today. I'm looking forward to catching up with you through the course of 2024 to check on rent.com.au and RentPay's progress.
Thank you, Finola. Cheers.